Hello, everybody. Welcome to episode 79 of Bank to the Future Live. We've been doing a lot of interviews recently, but now it's back to me and Famida taking your questions. And I'm going to give you several updates on our new initiative at Bank to the Future, the Retirement Plan B, and a special free video series that we've created at this end of year that we've been working on for a long time. That we wanted when this whole, the health crisis situation first broke out. So can you believe it? It's been approximately a year now. We started giving lots of live updates, and the team wanted to come up with an initiative to really help our investors in these times because some people are going through challenging times financially. Others, they've had a really explosive growth year. And we think that there's lots and lots of change and things that investors are going to want to be updated on as the markets unfold. So for those of you that are new to the Bank to the Future live channel, I think we've got lots of our regulars here. Let us know in the comments section where you're tuning in from, whether you're a regular investor on Bank to the Future or whether you're a new investor. Famida, as always, will be moderating and we can check out that live chat. So say hello to us. And also, if you're watching this, I do really appreciate if you give us a like and a share so that we can increase the size of the investor community as we share different information that we can support our investors on. So a little bit of background. And then we'll give a few announcements. And I've actually got a slide presentation we can go through to try and add some more visuals to this as well. And so the background is that, as I said, we have now had over 100,000 investors through Bank to the Future that have actually registered and are looking to or considering building a portfolio in the future of finance and technology. We've facilitated over 100 deals now, and 6 of them have gone on to become unicorns. Some of them have gone bust. And there's others that are sitting in the middle that people are still looking to see whether they achieve their growth goals. We also launched our secondary market. But what we've noticed from getting a unique insider perspective from Bank to the Future started in 2010, which was just a year after Bitcoin. And we're now the longest standing company in Bitcoin and the world's first crypto securities business. We were celebrating a decade, and we were on both a China and US tour for meeting our investors when the pandemic actually broke out. And we've seen a lot of what has made some of our investors incredibly wealthy and what has left some still trying to achieve their financial goals. And part of it is that people don't fully understand where an equity portfolio fits in to their overall investment strategy, investment approach. And most people just don't simply have any kind of investment strategy and approach. Others didn't really sort out the tax efficiency side or the legal side, and therefore ended up with crypto holdings and all sorts of stuff that they're all, as the world has caught up, and now Bitcoin has become this, $500 billion asset. We started approaching new all-time highs this week. We wanted to provide something that we thought would be as useful as we could to our investors who want to build and protect their wealth in what I've been calling on my personal YouTube channel, the Great Depression of the 2020's. So maybe some of you watch my personal YouTube channel where I give up-to-date economic commentary. And this show is where we just cover for our investor communities that are looking to build their portfolio in the future of finance. And so that's really the background. Having seen the difference between so many investors, we get a very unique insider perspective. And so what we wanted to do is level everybody up and give them a completely free video series where we could guide them on exactly what I will be doing in the current markets, because that's the other thing. Many people think that, well, if you at Bank to the Future and Simon were involved in the Bitcoin and the highest performing asset class for 10 of the last 12 years so early, then there's luck involved in that. Now, there's always an element of luck, but I've seen many, many people that were there and still didn't achieve their investment or financial goals. And so I wanted to create this video series to help people understand the difference between that and do it in a way where we context it, we do it in the context of the current market. So in the live chat, let me know if you've already watched video 1, because we've already released the first video and the comments were really, really amazing. I'm just going to give a quick screen share before we dive into the presentation. And as always, Famida will be going through this. So if you've got questions that are coming up, Famida will actually be pulling those out as well so that we can cover them. This is your opportunity to get your questions answered, and we'll cover as many of them as we can after the initial presentation. So let us know if you watched video 1 already, and if not, I'll give you a quick glimpse at what we've been seeing here. So hopefully you can see my screen. So this is the link that we actually shared with you yesterday. You would have got an email from me. And we sent a reminder email today. That will be the last email that you'll get unless you actually opt in here. We sent an email to the Bank to the Future list, letting them know about this free video series that they can claim. And we went all out on this video series. We spared no expense. We spared no time to actually produce what we consider to be the most comprehensive and best guide that we could put together in order to help people in these current markets ahead. So the last email went out today. You won't hear on it unless you actually register here. And if you register here, which is www.retirementplanb.com, then you'll be brought to a new email list. And in that new email list, we'll keep emailing you that video series. We just told you about video 1 and the initial series. But if you register there, then you'll be brought to a new list where you can get notifications if you actually want to receive video 2, video 3, and video 4. And I'm just going to go through. We'll also be giving everybody, if they get through all 4 videos as an incentive, a free digital copy of my book, Bank to the Future, Protect Your Future Before Governments Go Bust. For those of you that don't know the story behind the book, Bank to the Future, for me, is very familiar because Famida was dealing with this at one point as well. We had a publisher that published my book way back in 2010, and it was the first published book to include Bitcoin and forecasted many of the trends that we've been experiencing. There was a couple of things I would change in that book that I didn't understand in my less wisdom youth about privacy and the importance of privacy. That would be one of the things I would change, but for many of the other things were actually came to be true in that. But the publisher has actually the publisher has actually pocketed all of the money from publishing the book, never actually paid a royalty. Now, I didn't do it for the money, but I thought because they've never actually done that, never responded since, they seem to still be distributing. But we decided to just give a digital copy away free as a reward for everybody that actually did that because the money's just been going straight to the publisher. So that's our way of trying to deal with that one at the moment. And we just haven't had the time to rewrite the book or find another publisher because of other priorities. So that's a little background story. So you can register there. And if you complete the video series, then you can get a free digital copy of the book in case you want that one. We'll be figuring out how to deliver that afterwards. Also want to give a quick presentation on the goals behind this, just so you understand. You'll be seeing, I've got this little pointer here that makes things very large when I'm pointing at it. This is our free gift for Bank to the Future investors. I'm not sure if that screen gets in the way. I'll see if I can move myself at the same time.
It's looking good. It's looking fine, Simon.
Okay, well, I'm gonna, I've got bad eyesight, so I'm gonna lean forward. Okay. And so I'll just switch my camera off because you'll think I'm looking really weird. Okay, great. Is that still the screen now?
No, you've reduced the size. Okay, now it's back. Yeah.
Excellent. Okay. All right. So let's jump into the questions. The presentation. Then we'll take the questions. So this is a free gift for anybody, actually, but we designed it with our Bank to the Future investors in mind. And it's not letting me go to the next slide. There we go. And the whole premise behind this is to help our investors build and protect their wealth in the Great Depression of the 2020s. I believe that we are in the Great Depression of the 2020s already. It won't be referred to that at this stage because there's been a lot of interference in markets to try and skew the numbers to make people think that a different thing is going on with markets at all-time highs because the Federal Reserve has taken the other side of every trade in the market. So we're in a very unique time in history. And I call this time the Great Depression of the 2020s. Now, while that is a very dramatical headline, I do believe it will be referred to in history books from this as this. And the Great Depression of the 2020s, as we saw in the last Great Depression in the 1930s, was 100% politics that gets you out of a depression. And so rather than leaving it to market forces, we're going to be in the hands of politicians. And there has been much politics around changing of presidents and elections and all sorts of stuff right now. And it is actually going to have, at the end of a debt cycle, I believe, an impact on your portfolio. And so this free video series is designed to help people navigate what we think comes next. And more importantly, use Bitcoin, the traditional markets, and the tools used by the wealthiest 1%. And we've been working really hard to try and bring those tools to everybody so that they can actually use those rather than traditionally having to go to, we can't use this as individualized investment tax or legal advice or investment advice. But we can do what I'll be doing is exactly what I'll be doing, building these tools so that people can understand some of the different tools and structures that are actually used, and then help people have more lower cost structures to actually take advantage of what the 1% actually do. Not assuming everybody is a Bank to the Future investor. I know this is for you, but we also have new investors. This is a product and a lative initiative. This year, we were celebrating decades as the world's first crypto securities business. And in case you don't know, we're an online investment platform for investing in the equity of financial technology companies. Some of the companies that are in our portfolio, we've done Coinbase, Kraken, Bitfinex, BitPay, Blockchain.com, Circle, Ripple Labs, Bitstamp, Robinhood, and many, many others, as well as some of our more successful ones. And as I said, building a portfolio in private equity, you'd expect some to go on to achieve unicorn status, which is the goal when investing in such an asset class. Others to dwindle in the middle while they try and get market share, and others to go bust. It's a high risk, high return investment class. So that's us. I'm going to be doing the whole thing. I created the whole program and pulled in all of the advisors that I would use so that we can make it more accessible to people that actually want to join us. The brand we came up with is Retirement Plan B, as you can see from the website. And as we said, we'll be giving a free digital copy of the book for everyone that just consumes the free video series. We've also managed to get Andreas Antonopoulos to give some guidance on the whole security side of it for those that actually end up going beyond the free video series and joining us to actually build a retirement plan B for themselves. As I said, we give everything away in the free video series, but afterwards a group of people might want to come on and join us to actually build a retirement plan B alongside myself. And Andreas is one of the guest experts. He'd be my go-to advisor if I need any advice on the security and technical side. We've also brought in Pamela Morgan, who's the author of the book Crypto Asset Inheritance Planning, and Adam Vaziri, who is the world's first Bitcoin securities, the Bitcoin lawyer that I know of. He was certainly the first in Europe. There might have been a couple before him in the United States. But he's also an advisor to the Bank to the Future board, part of one of our group of companies, Diacle, and also has a RegTech solution called BlockPass that Bank to the Future, full disclosure, is also a shareholder and investor in those entities. And we bring in many other guest experts. For example, Plan B We had to try and get Plan B. You may know him, very popular Twitter account, approaching 200,000 followers. And Plan B will actually be coming in as part of Retirement Plan B to guide more people on different models for modeling Bitcoin in relation to structuring a retirement plan. So, and we got more people that we're very excited to bring. But the gift, as I said, that we want to bring to you is this 4-part video series. So you can head over right now. It is live, www.retirementplanb.com. And as I said, if you enter your email there, then we'll actually give you video 1 right away. If you like it, then you will receive emails about the other videos. And if you don't like it, then you can just unsubscribe, no problem. But from the feedback so far, if you look at it, once you enter your emails, you're taken over, you can see that the comments have been absolutely incredible. You know, it's easy to get comments on a YouTube video. It's easy to get comments on a social network. But actually getting comments on a private website is actually a lot rarer. So I think that's testament to what people are actually thinking about it. So we're really glad that you've been enjoying that. But just to give you a bit of an idea, there's the website, there's a URL we talked about. And the 4-part video series, we really wanted to structure this in a way where it's very useful to the maximum number of people. So a lot of thought went into this. And the first video that you get, you know, completely complimentary when you register, is the background knowledge that I think people need to understand the context of the current environment that we are in today. So as fast as I could, you know, I've personally spent the last 20 years obsessing over this subject. I started my master's in economics in 2000, worked in investment banking, trading, market making, corporate finance, spoke at the first Bitcoin conference, wrote the book, Bank to the Future, and also been a fintech angel investor, and founded BnkToTheFuture.com with Bliss Dixon as the co-founder. Been investing in over 100 different companies in the industry and a commentator. What I've done is I've pulled all the things that I think people need to know, the bare necessities, as it were, from 5,000 years of monetary history, so that people can understand the role of the dollar, gold, and Bitcoin in today's environment, the Great Depression of the 2020s. That's released now, and it's been very popular. Shortly after, if you register, you'll actually receive an email notification about video 2. And in video 2, we're going to be covering the investment lessons and mistakes of, and it's going to be very fun, this video, but I also want it to be useful. It's not just fun for the sake of fun. It's actually going through what I consider to be the biggest mistakes of very high profile investors and Bitcoin figures. We cover Warren Buffett, we cover Peter Schiff, we cover Paul Tudor Jones, we cover Ray Dalio, who I consider to be one of the greatest traditional investors of all time. And we cover figures from the Bitcoin community like Tone Vays, Roger Ver, and also people like Robert Kiyosaki involved in the wealth and wealth creation industries. And we go through all the lessons and mistakes and make it useful for you so that you can understand how to do things differently in the Great Depression of the 2020s based upon the lessons of people that dedicate their whole life to investing. In video 3, we actually go through the complete strategy that I'll be following. And one thing I didn't mention is that I'll actually be doing this live afterwards, where I'm actually going to I'm going to take $1 million of personal savings. So I don't want anybody to do anything or learn anything that I wouldn't actually do with my own money. And so all of this is built around what I'll be doing live as a result of the current markets, using products from the traditional markets in order to protect from the different outcomes that can come, that I'm forecasting are going to be, that could be coming, including inflation, deflation, growth, depression, recession, and how to actually enhance that with Bitcoin and the wider crypto markets using the retirement plan B strategy. So in video 3, we actually break down the different strategies and how to combine them with the traditional markets and exactly what I'll be doing to build that retirement plan. Also, some people kept asking me, well, I don't have $1 million of savings. I've got $100 or $1,000, or does it work for 100 million, 10 million, and everything in between? So I just want you to know that the tools that I discuss scale down or scale up to different sizes. So this can be replicated. And to make it more interesting for more people as well, I wanted to make sure that I do this with zero savings and just a contribution from a regular income, so that people out there that just want to follow along and understand this can do it depending on their situation, as long as they have an income. Unfortunately, we can't help people that don't have an income because your first job is to try and build and fix that situation. And then in the final video, we go through how, what I said, we'll be doing it live, tie it all together, bring it all up, wrap it up, and help people understand if they want to actually go on and build it with us as well. So that's the whole thing. There's a summary of that. As I said, it's completely free to do that. And also just wanted to help people understand a bit more structure on the types of things we'll be doing. Those that actually go on to build a retirement plan B, the first step is to actually really start to plan. What I've seen very often is people don't know how much risk one should take in order to achieve their retirement goals, if they even have any retirement goals. So we create all the spreadsheets, worksheets, allow people to actually model, and so what I've found is that people take excessive risks for many reasons, because they vastly overestimate what they can achieve in 1 year and underestimate what they can achieve in 5 to 10 years. So the financial ladder is about really getting those allocations right. The second is the investing principles of the retirement plan B. The third module that we'll be working with people on is the blueprint. So the exact strategies, structuring, everything. Then it's about maximizing the amount of Bitcoin that you actually hold within your retirement plan B. And then using some of the different income generating strategies in a responsible way, really allocating how much should be taken to these different types of risk strategies to generate income. And then the all important part that most people don't think is as important because they think about it later, which is all about the psychology side, making sure you don't blow up and protecting your retirement plan. I see many people that are involved in crypto from the beginning that just blew it all up by taking unnecessary risks and not thinking about how to protect it. And the fear of onboarding, making sure you got crypto-friendly banks, whether you're a high net worth investor or whether you're starting lower down, and also the different structures and the tools that are used by the wealthiest 1%. And more importantly, which a lot of people haven't figured in the crypto markets, is how to pass it on when inevitably something happens. So in terms of who we're targeting for the retirement plan B audience, we've got the normal Bank to the Future investors, but we're also finding two different demographics. So the Bank to the Future investors are qualifying investors that are building a portfolio. The different types of people that might be interested, we're seeing a lot of traditional investors who finally want to diversify into this Bitcoin and crypto markets as a result of the situation with their traditional, the traditional markets, and they're looking to diversify. We're also seeing that everyday people that don't necessarily have started investing. Now, they obviously can't use Bank to the Future because securities are restricted to certain types of investors. But the retirement plan B approach doesn't rely upon restricted investment opportunities that are only available to certain types of investors due to securities laws and various other things. And these people might want to put a percentage of their income into getting into thinking about these things for the first time. And finally, we've seen a lot of investors at Bank to the Future as well, generated a lot of wealth, and some that haven't quite made or their financial situation changed. They're sophisticated investors. They understand the crypto market very well, but they've never really thought about Bitcoin-specific tax planning, inheritance planning, how to have more peace of mind because you're doing things in the correct way, rather than the mess that some people have got themselves in. And really, crypto-friendly banking as well, getting that stuff right, scam protections, and just actually using the really good lessons from traditional markets to do things in a very responsible way. So as I said, you can check out retirementplanb.com right now. Once you register, you can see underneath the video some of the great comments. I'll put those up so you can actually go there. And I obviously need to give the disclaimer that because we're not actually dealing with you uniquely, this cannot be seen as investment advice, tax advice, legal advice. This is just a supplement so that you can then go off and decide how you want to use it. It's what I will be doing. And then you can decide how to structure that with your various legal advisors, tax advisors, or investment advisors, or financial advisors as well. So that's an important step. But some people will use it, try and get themselves in a position where they have these professionals as well to work with them, which again is another challenging situation, finding right advisors. So there you go. That's retirementplanb.com. That's everything I've got for you. So now I just want to take this opportunity to answer in an AMA as many questions as our community may have for us. And I'm going to put my video back on now at this stage.
Beat you to it, Simon.
Have you got? Oh, you got my video. You got your video. Okay, great. Okay, let me put this in gallery mode so we can see each other. Okay, have we got many questions come in?
Yeah, we do. Really good questions. Really good questions. You've already got fans in the chat, obviously. Our regulars are here, which is very cool. We have somebody from Houston, Texas.
Okay, yeah.
Okay, cool. So Crypto Chick has asked, sorry, sirens are going. What if you have been in crypto and want to retire in the next year? And I guess their point of view is from people that are actually already at the cusp of retiring.
Yeah, well, then, okay, so there's two different ways we could take this question, but I'll answer them both, even if it's not the which one you meant. Firstly is if you are at an age where you are about to retire and you haven't achieved your financial goals, then I would say that the retirement plan B, in order to get the full effect, you need to be about 10 years away from retirement to actually get the full effect. In 1 year, that would drive you into the types of get-rich-quick schemes that you often see people promoting, because 1 year is just simply not enough to achieve your financial goals if you haven't achieved your financial goals yet. So that is something that we can't really cater for. This is for someone that's got approximately another 10 years to go. The other direction that the conversation the question might have been, and maybe they could give more clarity, is what if I've already achieved all my goals? Is this actually something for me? Well, if you've already achieved all your financial goals, your problems just move slightly. I actually did a video on this on my personal YouTube channel, Simon Dixon, yesterday, around money problems never go away. So most people are in a situation where their biggest problem is not having enough money, and therefore supplementing it with debt and all sorts of stuff that they have to do. And I remember exactly what that was like, because at the peak, before I started Bank to the Future, I got myself in almost £100,000 worth of debt. I was in England at the time, so I know what that situation is like. So your problems move from trying to figure out how to make more money and all the different problems that you have around that to protecting your money. And so the problems of people that have already achieved their wealth, they don't go away. We have these big money problems in that it moves to protecting your wealth. And so the retirement plan B is built into two parts, which is build and protect. And so we go through how I would build, and then I go through how I would protect. And so those are the two different parts of it. So if you've already achieved your financial goals, the protection will be more interesting to you. But also, and part of the protection is making sure that you're not taking excessive risks with what you've already got, unless it's part of, allocating in a way that you actually know what you're doing. And so part of it is just putting structure to it. And I've seen a lot of investors over the years, some incredibly wealthy investors, some that never got there because they didn't put the structuring and protection measures in place. And so while I cannot guarantee that, but I'll tell you the strategies that I'll be using there.
Okay, cool. So I think the following question from that is a good one to take here. Well, Simon, so this is from Joan B. Joan MB1. Will Simon be talking about tax implications and planning around tax with investments?
So in the free video series, we will talk about the general, importance of thinking about these things, because I've seen a lot of people that just by not getting the tax structuring right, they end up having to sell all their Bitcoin. You get like a double whammy. You get this big tax bill because you've excessively traded. And by trading, every time you place a trade, which is what many people do in crypto, you create these taxable events. And then many people, because the actual implications of what asset class crypto is considered in your country, may not have known how to do everything because there's this brand new asset class. Governments didn't know what to do with it. Tax authorities didn't know what to do with it. So some people find themselves in these situations where they're trying to fix a bit of a mess, not really just because of their own mess, but simply because it was a government mess. It was everything a mess as well. And so they found themselves in situations where they overtraded and ended up creating these taxable events. And then the markets crashed and they had to sell all their Bitcoin to give it to the government. It's like this double whammy of having to give all sell your Bitcoin, give it to the government. The government won't even take the Bitcoin. So it's like this waste of that so many people found themselves in. And that's simply because, so in the free video series, I'll cover how some of the mistakes that investors have made and how to avoid those types of mistakes. And while we cannot give the individualized tax advice, I'll be sharing when we go through the actual modules for those building it with us, the exact structure that I'll build from scratch, starting again, if I were starting again today, to address these situations. From there, once you have a structure, it's about being in a position, if it generates you wealth, you then want to pay for some really good advisors and tax advisors to go through your complete individualized situation based upon your jurisdiction. But the structure that we put together, we've got tax opinions from various jurisdictions, but we can't cover all jurisdictions. But what we do know is that this is a structure that then you can take if you end up generating wealth to your tax advisor, and you've structured it in the right way, so that you can then figure out how to deal with it as you need to draw down or do certain things.
Cool, thank you for that, Simon. So a question here from Russell Hopwood. How much do we need to be able to invest and take part? I know you covered this earlier.
Well, firstly, the free video series, nothing, is free, is our gift to you. And if you want to join the program, then you're going to need, I'd say, a minimum of $10,000 of investable income to actually do it with us. But if you're not in that situation yet, then you could decide to use the free video series. And for me, it's about getting started no matter where you are. So, in crypto, you can actually get started with $10 a month if you want, and it still has the same results in terms of percentages if you're doing $1,000 a month, $1 million a month, or $100 million a month. The percentages are still the same. You're trying to get on a compounded effect. So it's percentages that you need to look like in terms of absolute numbers. And as I said, most people vastly overestimate what they can do in a year and underestimate what they can achieve financially in 5 to 10 years. And so this is about a 10-year horizon so that you can achieve what you set as your goals for that. So the answer is the free video series and an income is enough, whatever it may be, as long as you make the decision that from now on, no matter what you earn, you are going to spend less than you earn and allocate a portion of it, not to paying off your debt, not to paying your mortgage, not to paying anything, but paying yourself so that you can start thinking about accumulating assets and building your retirement plan. And so you just need to get yourself in a position where you say, of what I earn this month, this is the amount that I can allocate just to investing in myself and making sure that that happens every single month. If you follow that, then you can start to build a path and a plan wherever you are, as long as you've got enough time to actually do it. As I said, if you're trying to do this in 1 year, then you're going to be taking excessive risks and the markets could just go against you.
So the total cost is 10K, did you say?
No, so you'd need about $10,000 of investable income if you're going to actually end up, doing the program with us, which is it's going to be 2,997 that wants to do it with us. Mm-hmm. And you'd want to have to pay something like that, you'd want to have about $10,000 of investable income already. If you're not in that situation, then, it's not, paying $3,000 is just not feasible.
Would there be any sort of, I don't know whether you can do this now or maybe later, but like an incremental sort of pay bit by bit sort of thing, maybe?
We're not doing it at this stage. What we try and do later, our goal in the end of this is to be able to bring something to the masses that the masses can actually use. But that's why we just created the free. So those people can use the free rather than having to pay anything.
Okay, cool. And so Jonah B has also said they would love to be a guinea pig for you if you're looking for volunteers closer to retirement.
All right. Okay. Thank you.
So Robert Wilson has asked a question. Would love to know Simon's thoughts on buying Bitcoin related funds such as GBTC.
Yeah, so GBTC is absolutely exploding in terms of how many Bitcoin they hold right now. So GBTC, the reason that they've got a foothold right now is because it was created by Barry Silbert's digital currency group, Grayscale, which is one of the subsidiary companies of Digital Currency Group. And Barry Silbert was early to actually a real role model because he created the second market, which is where he made his wealth, which was trying to achieve a similar goal to Bank to the Future in terms of actually making it possible for people to invest and sell shares in private equity. That was later acquired by NASDAQ. But Barry Silbert took a big chunk of his wealth and put it into Bitcoin and started doing exactly the same strategies, which you'll see a common theme in many of the investors that we cover that we've seen that made wealth in crypto. They put it in Bitcoin, they diversified through private equity, invested into the infrastructure. They had a long-term horizon, and they diversified into various other innovations that came from the markets. Exactly what Barry Silbert did. Exactly, the theme of those that made their wealth, and then they structured it and they had plans. But anyway, digress. One of his products that came was a GBTC, which is not an ETF, but it's a fund that holds Bitcoin and allows people to invest in Bitcoin using their pension. Now, you pay a huge premium for it because it's mainly used by people that just don't want to hold their own Bitcoin and want some kind of structure. And so you pay a ginormous premium over the price of Bitcoin. My personal belief is that everybody is going to need to own their own private keys at some stage and own their own Bitcoin. And while you can hedge into some of this, and so, when I worked in investment banking, I ended up with a self-invested personal pension, and they're very restricted in terms of what you can invest in. So I used products like GBTC to just use, take that with my traditional pension and just forget about it. But for the retirement plan B, we think of a slightly different approach than just simply giving it to a fund. We also believe that the SEC has actually had a change in leadership recently, and more crypto-friendly people have joined the SEC. So I think that better products are going to be launched in the future, like exchange-traded funds, which have a much, much lower cost structure and are more reflective of market value. So At the moment, it's just desperation that is the only product, one of the only products out there. And so you pay a huge premium for it. The smartest way is to just own it the way Bitcoin was designed. But for some people, they're not ready to do that yet, or they want to allocate certain pension funds to it. Or wait for competition. There's more competition, coming around the horizon that will make these more efficient pricing, and there'll be more products like that as well. We reckon the types of things we look at is getting the right mix between owning your own private key, using Bitcoin the way it was designed, and then also hedging against you making silly mistakes through some kind of, good custodial relationships as well when you want to follow different investment strategies approaches. But yeah, GBTC is the market. It's a product out there. It's got its upside. It's got its downside, but it is bringing in the institutional investors are going berserk for GB. I think they're bringing in about, some weeks they're bringing in 25,000 Bitcoin that they're scooping out of the supply, as everybody's trying to onboard into the industry. Now it hit, started reaching new all-time highs again this week.
Wow. Thank you. So another question from Jen and B. They watched your recent interview with Market Sniper.
Oh yeah.
Where you said you wouldn't recommend investing in cryptocurrency other than Bitcoin. Is this realistic considering scarcity, rising price of BTC, and investment variety?
So again, there's a danger in a small amount of information being interpreted rather than the complete approach. So do I invest in various other cryptocurrencies? Yes. But what most people do is they say, what's the next big thing? What's the next big Bitcoin killer? And then they don't know anything about something, and they suddenly put all of their money or all of their Bitcoin into this nice big shiny object because somebody on Twitter told them that it's the future of the world. And then they put all of their money into it, and it ends up either making them incredible. They get these crazy pumps, and they make 5,000% returns. Have I done that? Yes, these things have happened. But do I end up putting all my Bitcoin into that? Absolutely not. And so, it's about having a risk managed approach to be able to take excessive risks when you want to, and know that that is gambling. And so when you do that, what we've seen, so one thing that I've always tried to help people understand is if you look at national lottery winners, 80% of national lottery winners within 2 years fall back to their original financial position. That's because they won the money rather than made the money. And when they won the money, they didn't have the tools to prepare them to actually how to protect the money. And so 80% of them within 2 years end up back in their original financial position before winning the lottery. I've seen that happen time and time again with those that get their 5,000, 1,000x crypto investments. They end up taking a bit of their Bitcoin, they generate wealth, they put it all into this one thing, and then they're like, well, where's the next one? What's the next one? And they're speaking to all these people, hanging out on Telegram, hanging out on Reddit, listening to crypto Twitter, trying to find these different things, and they're looking for gurus, and they end up investing in scams, and suddenly you end up with no Bitcoin. And that happens to a lot of people. So that's what I was probably suggesting people shouldn't do. But then once you have a risk managed approach, you have asset allocation, which is this is the percentage allocated to this, this is the percentage allocated to this, and this is the investment goals and my time horizons, and this is how I know when to buy, when to sell, when to rebalance. These are the types of things that traditional fund managers do way better than people in crypto, but they're just doing it with traditional asset classes. This is where that marrying between the two different worlds, my traditional background versus the crypto world, where you have these crazy returns that are just completely off the scale. But also remember, with off the scale returns come off the scale risk and losses too.
We have like 10 minutes left, and I suppose maybe we could close on this question, and the answer will probably be a bit of a long one, but with the target audience for Retirement Plan B, there are a lot of people that don't actually have a clue about Bitcoin. So they're new, right, to crypto. And so the way that their investing mindset is working now is completely new. It's a completely new, fresh slate, right? So, I mean, this question from Keith Sava is, can you create a look after this plan? So like what happens afterwards for people that don't have a clue what they're doing in investing in crypto?
So the first thing is, in the free video series, we covered also some of the basics. We created a really nice animation to actually really help people understand what we think they need to know about Bitcoin. But unfortunately, your education, well, not unfortunately, your education never stops. So community becomes really important. And one of the things we have been doing is, firstly, we have community at Bank to the Future. We have community through these BF Live broadcasts. I give lots of economic updates for free on YouTube. And those that are going to be joining the Retirement Plan B program, there'll be a community within the portal as well. So they'll have access to it for 24 months. And then there's, people are commenting under the videos already and all sorts of stuff. But in terms of the ability to actually, sit down with somebody one-to-one and help them with these things, that's just not a scalable thing that we can do. I'm sure there's other people that will become Bitcoin consultants and crypto consultants and all sorts of stuff. You're seeing a lot of them out there as the industry grows. But it's a bit of a dangerous game. But yeah, we can't. Our model is using technology to provide more financial innovation to as many, more people that can be involved in these things, rather than us actually providing the one-to-one that's needed there.
Yeah, I mean, you mentioned technology, and I imagine that there are some people that aren't so technologically savvy. What are the implications for these people that do want to get involved in crypto and do want to secure a retirement with crypto?
Yeah, unfortunately, it's an impossible mission to solve that. The world has moved to technology, and those that fall behind are unfortunately excluded from many things in this world. That's a global trend, and I talked about it in my book, Bank to the Future. The people that I really feel sorry for are the people that won't adjust to change in technology, or they can't adjust to change in technology because everything's going online, and that was completely accelerated in the Great Depression of the 2020s. And unfortunately, this is a challenge that one needs to overcome. I mean, one of the first things we talk about is we don't expect people to be developers, but you're going to need a basic level of technical competence to actually use these products. And those that don't have these things, the world is not that way. You'd have to, I think, live off the land and have your bars of gold and bury them in the garden or something. But everything's moving to technology, and that's the world we live in today. So yeah, we can't really cater for those that don't have that, that basic level of technical competence. I'm sure that's going to have to be someone else's mission. And that's a resources and an education thing and a psychological desire to actually adjust to change that is covered through different things. All right. So thank you for covering those questions. I thought it was going to be a quick one today, but it never is. I think it was really nice to do a slightly different tone at Bank to the Future and really see if we can, when we bring these investments to our investor community, we just really wanted it where people actually understood where that actual fits in and realistic expectations. Because one of the big problems we've seen is people blowing up their wealth just through unrealistic expectations. We through things like products that we launched years and years ago, like the Bitcoin Capital, those that didn't have the longer term time frame and horizon, didn't do that well. But those that actually saw it all the way through got returns that are greater than the average investments out there. So, we've seen it over the years, and we want to help people have structure, realistic expectations, and actually realize what it takes to actually achieve your financial goals, rather than just going out there and endlessly not doing those things. So let us know in the comments what you thought of this. If you did like this, then please do share. We appreciate trying to grow our community that are interested in these topics. And as I said, head over to retirementplanb.com, and video 1 is now live for you. Underneath the comments, let me know what you think. I'm reading all of those at the moment. And that's going to do it for episode 79 of Bank to the Future Live. Bye, everybody.